Welcome back to Prime News. We're continuing to cover this economic crisis we're in the midst of. Dow tanking again, stocks down 678 points as you see that ugly number, if you got the stomach for it. Tough to look at our 401ks. We all know that. And joining us on this conversation, we welcome back Chris Markowski, talk show host of Watchdog on Wall Street, and also with us, Ali Velshi, senior business correspondent for CNN. Ali, let's get you in on this. Everyone's wondering why. I want to get your take on it. Is part of this that the U.S. Treasury is talking about buying up some stocks from troubled banks, or how does that fit in? Explain that one to us.
Well, it could be. It could be that the ban on the short selling of financial stocks, that's the ability to bet that a stock is going to go down and then profit from the fact that it goes down. That usually sends prices a little lower. It could be that expired today, that the federal government had put a restriction on short selling in a few weeks ago. It could be a lot of things. It could be that this market is headed toward its bottom, which is what happens in economic cycles. A market bottoms out. Sometimes it bounces around the bottom and then it starts coming up. And if it is headed to its bottom, there are a lot of professional investors who say it's got to get there. And that might be what we're seeing. We might be headed toward that. Now, that's pretty good news for those of you who held on to your 401ks and you're noticing that they're down 35% or so from a year ago. As Chris will probably tell you, it doesn't mean you made any mistakes. It's not like buying some internet company that you didn't know what it did. You diversified well. You did what they told you to do, and guess what? You still lost. But if we are coming to a bottom, that means stocks will start to get cheap and people will start to buy them, and your 401k, your portfolio manager of that 401k is looking to get in and get some bargains at some point too. So we could be coming to the end of the stock market problem, but that doesn't mean the rest of the economy is getting better.
Gotcha. Okay, let's get some calls in. Judy in Mississippi. Judy, go ahead.
Yes, Mike. We are retired military and disabled and live on Social Security. We raised 6 children, and we're raising 2 grandchildren. We managed to make ends meet. I know it's hard, but these people that went out here and bought these houses that they couldn't afford, I don't think they should be bailed out. We had to take cuts.
Judy, thanks again, and again, we applaud you. And we had Roy who called us before the break, Ali. As we go back to you,
I heard that, yeah.
You know, and then you get Judy here saying the same thing, that we're paying a price for basically our greed. You agree with that?
Well, sure, and I really do applaud those people who didn't do the wrong thing and did struggle through. And guess what? We're all going to learn a lot from them this time around, because we're going to have to. The bottom line is we're all in this together. When we lose jobs, it ruins our tax base. People don't buy things. People don't get employed. That means that there's more people without jobs. So we are kind of in this together. We learned this from foreclosures, right? If you got 5 foreclosures on your block, it doesn't mean that you didn't do anything wrong, but your house price suffers. So unfortunately, we're all going to come together on this and learn from those lessons, I hope.
Yeah, it's a tough one, but hopefully we will indeed learn from it. Gerald in California. Gerald, go ahead.
Hi.
Hey.
And instead of bailing out the banks and mortgage companies and insurance companies, why doesn't Congress give $30,000 or $50,000 to every taxpayer, and they'll pay off their debt, they'll buy some large items, they'll put it in the bank, they'll invest some, the banks will have money and have fluidity. Small business people will be getting this money too.
Okay.
They can put it into their businesses and make payroll or inventory, you know, or whatever they want to do.
Right. Gerald, you're not alone in that. Others have mentioned that. Chris, is that even feasible? A lot of folks have mentioned that, saying, give me the money. I'll stimulate the economy and pay off my bills.
Yeah, I think it's a poor use of capital. I mean, I remember several weeks ago, and I was going to remember when Phil Graham actually a couple months ago now, took a lot of heat, and John McCain's taking heat for saying that the fundamentals of the economy are strong. I happen to agree that the fundamentals of the economy are strong. If you get the 2008 car of the year, let's say it's the Cadillac CTS, and you own it, it's a great car, fantastic car. But if that car has no gasoline in the tank, that car's not leaving the lot. And capital is what makes our economy grow. It's the foundation of our economy. And unless we get Wall Street up and running the way it's supposed to be again, funding companies, helping create companies, allowing small businesses to flourish, then we're not going anywhere. We're not going to see any economic growth, and we're not going to see any jobs growth.
And Mike, by the way, if you did give that money to every American, not every taxpayer, but every American, it'd be about $2,300. And not everybody needs the $2,300, and some people probably need $50,000.
Right.
So the sentiment I totally get, but equal distribution of that. The problem is, even with banks, even with financial institutions, some will get saved by this bailout, some won't. Not everybody gets sort of an even share of it. If for those people struggling to get their head around why this doesn't seem fair, don't bother struggling. You're right. It's not fair, but it may be what we need to do.
Okay. All right, gentlemen, thanks again. Ali Velshi, thanks for taking time. Chris Markowski, you as well. Hope to have you both back as we continue to ride this out. Guys, thanks so much.